Hi everyone, my name is Jade. In this update, we're going to cover how the market is giving us mixed messages, which is dramatically shifting the odds of when, not if, when we're going to have an economic recession. Also, supply of residential units. So that is actually a multifaceted issue that is not going away anytime soon. So we're going to do a little bit of a deep dive into that. I'm also going to show you how demand is surprisingly resilient in this economy. That, thanks to the low inventory, is really keeping our housing market strong, albeit not affordable. And then also, there are chances of us having a housing price correction, not a housing recession, but a correction. And there's some things we're going to want to be looking out for. So let's dive in. What do I mean by mixed messages in the market? So in one hand, we have steadily declining inflation as well as a strong labor market. But in the other hand, we have negative wage growth. We have depleted savings. We have rising credit card delinquencies and consumers in all income brackets that are spending less. And that's creating mixed sentiments, again, in all income brackets. While anything can happen, according to the chief economist at Moody Analytics, the odds of having a recession this year is 1 out of 3, which makes it about a 50-50 chance we'll have it in 2024. Now, Justin Wolfers, who is a professor at the University of Michigan, he says that there's never been a recession while the labor market is running so hot. In fact, he said that it's actually absurd to use the word recession while we're still creating new jobs at this rate. Now, while delinquencies in auto loans and credit cards are rising, the mortgage industry is actually still very strong thanks to tighter lending standards, and especially after the banking crisis that we saw earlier this year. Foreclosure filings, according to ATTOM data, between the first 6 months of this year, which includes default notices, scheduled auctions, or bank repossessions, that number is actually up 13%. But as you can see from this chart, it's still nowhere near the level of foreclosures that we saw during the housing crisis, which is what helped to crush our market. Of course, anything can happen. The biggest threat would be a steady and uncomfortable rise in unemployment. However, the chances of another foreclosure crisis is exceptionally low thanks to the amount of equity that most homeowners have, as well, again, as the tighter lending standards. So in terms of new construction, building permits is the authorization to begin construction of that residential unit. Starts is when the excavation of the foundation for that residential unit is completed. And obviously completions is when that new construction comes online to the market. Now, according to the U.S. Census Bureau, we saw, in terms of building permits, 15.3% less building permits in June of this year as compared to June of 2022. With building starts, we saw 8.1% less starts in June of this year as compared to June of 2022. Completions, we actually saw 5.5% increase in completions in June as compared to that of last year, which bodes well to adding new supply to the market as more new construction that was previously backlogged comes online. So in terms of single-family homes right here in Walworth County, we actually saw a dip in new listings in the month of June, but a rise in active listings, which means that what could be happening is we're seeing a waning demand, homes are being overpriced, or maybe a little bit of both. We'll look at demand in a bit. So another proxy for housing availability is housing turnover, but according to Redfin, only 1% of the nation's homes have changed hands this year, which is the lowest share we've seen in almost a decade. Now, according to Redfin's analysis, comparing the first 6 months of 2023, we have 28% less homes that change hands than compared to 2019. So what does this mean? That means that the prospective home buyer has 28% fewer homes to look at than they did prior to the pandemic. So two things actually happened. We had a housing boom in 2020 and 2021 that was driven by the pandemic and ultra low interest rates that depleted the already low supply of available inventory. And then in 2022, we had the fastest and most aggressive rate hike by the feds in nearly 4 decades, which literally handcuffed homeowners to their home if they have sub 5% mortgage rates, who now don't want to move. Speaking of interest rates, according to the St. Louis Federal Reserve, as of July 20th, we were at an average of 6.78 for 30-year mortgages. So according to Taylor Marr, the chief economist at the research team of Redfin, 4 out of 5 existing mortgages have sub 5% interest rates, hence the term lock-in effect. But we're not just feeling the lock-in effect, we're feeling the after effects of the pandemic. A lot of movers, sellers were pulled forward. Sellers accelerated their plans to move because of that pandemic. According to Taylor Marr, 3 out of 5, which is over half the US households, have moved within the past 4 years, which means they're not likely to move anytime soon. So looking at Walworth County, absorption rate, if no new homes came on the market, now and moving forward, how long would it take for the current demand to absorb all the available inventory? That's what the absorption rate is. As you can see, it's going up. Anything below a 4 months of inventory is a seller's market. 4 to 6, that's a balanced market. Above 6 is a buyer's market. Now we're moving up. The reason we're moving up is we do have more listings, but we do have a little bit of waning demand. So it's creating an artificially balanced market, even though inventory is so much less than what it was this time last year. Now this graph shows that we have an increase in days on market for homes listed. Now this is indicative of waning demand. I actually spoke about in one of my articles on the economic forecast, we actually have a decrease in consumer spending and more people are delaying those larger purchases such as homes. We still have strong demand, but it's definitely not as robust as it was this time last year. But if this trend actually continues into the fall and winter months, we might actually see a housing price correction. Why? Because longer days on market puts downward pressure on home prices. Luckily, though, we do have pent-up demand and cash buyers. So that will keep the housing prices afloat. Not where it is, but it'll definitely keep the bottom from dropping, which is what everybody is afraid of. So this graph below from Atom Data shows that across 96% of the major metropolitans, the median price of homes is still strong. What that green line though is, that's home price appreciation. So we're stagnating in terms of appreciation nationwide. Now this graph from CoreLogic, it shows how much homes are appreciating by state across the nation. Now, in the state of Wisconsin, we've appreciated on average 5 to 7%. The fact that home prices have increased is really a testament to the strength and resilience of our economy, especially given the suddenness and the significant magnitude of the rate hike increase that we have seen. And all things being equal, that should actually bode well and be supportive of a strong real estate market that rides out any economic recession, all by maybe potentially a housing correction in a few regions. The challenge we have across the nation and here in Walworth County is affordability. So the chart below shows the Walworth County median sale prices versus median household income. And as you can see, median home prices are appreciating faster than median income prices. This is especially true for the more affordable homes for first-time home buyers, especially with the amount of people looking to buy those smaller affordable homes for short-term rentals. So that's really stressing the market in that sense. All right, so sold to list price ratio. If your home sells above the original list price, you're going to get over 100%. If it sells below list price, obviously it's going to be less than 100%. So I mentioned in the last video, I thought May's dramatic dip was a bit of an anomaly and it was probably going to go up right on cue. June, it did. This is probably going to hover around, near and around that 100% mark. If interest rates stabilize, that's going to bring in more demand, and so we'll likely see this go up. However, if the market does correct, like I mentioned, due to waning demand, we'll see this number go down. Okay, so what's the bottom line and what does this mean for buyers and sellers? If you are a seller, this is still a good market to get top dollar in. But if you don't yet have a place to move, you're gonna wanna lock that down first. It's a lot easier to sell than it is to buy. If it's in your budget, your time and money budget, definitely going to want to make those upgrades, those cosmetic upgrades, so that your home has a great first impression, because first impressions really make a difference. If you have huge mechanical issues with your home, that's obviously going to affect the price that you can list it for and what a buyer is willing to spend on your home. So you're going to want to make those upgrades if you have to. If your home sits on the market for about 14 days without much showings, or longer than 30 days without an accepted offer, something's wrong, and you probably want to talk to your listing agent. If you're working with us, we probably would have addressed this before the issue happened. So food for thought. If you're financing, get pre-approved with a lender, and you're going to want to make sure you stay in contact with that lender on a regular basis, especially in this shifting market with rates doing what they are right now. If you want to rate shop, again, do this early. Don't do it after you have an accepted offer. Do it before you have an accepted offer. If you want to see a home and you're out of town or you can't get to it, have your agent, like us, do a virtual showing for you and then get up there during the weekend. That way, if you want to make an offer, you can, and you're not waiting and the home is off the market before you can even get there. If rates stabilize, expect to see more buyers come into that market, and we're going to see a rise in that list to price ratio. If you're expecting a wave of foreclosures within the next 6 months, don't hold your breath. All right, so I have covered a lot of material in this video. If you have questions, I love questions. Go ahead and send us a message. Our information is below, and I will be happy to speak to you about it. Also, click subscribe, and that way you're gonna get our monthly updates about what's going on in the real estate market here in Walworth and Kenosha County. In the meantime, thanks for stopping by. You stay classy, Lake Geneva.